वेलकम यू ऑल फॉर सोनू भारती कॉमर्स क्लासेस। आज हम दोबारा फिर एक पेपर करेंगे। ये आपके मेन पेपर का बी पार्ट है विच कैरीज 20 मार्क्स। इट इज़ बेस्ड ऑन योर बुक नंबर 3, जिसमें हम कवर करते हैं फाइनेंशियल स्टेटमेंट्स ऑफ द कंपनी एंड आपके एनालाइजिंग टूल्स, ratios and cash flow statement. The total value of this paper is 20 marks. Let's start with it. This is question 27 and financial statements are prepared on certain basic assumptions or prerequisites known as. So this is postulates is the right answer for this. And there is another option for question 27. If you want to attempt, if you are not confident about that question, you can attempt this question in this paper. So here, which one of the following is correct? So here quick ratio can be more than current ratio. It's not possible because the numerator of current ratio is always more than quick ratio. There is no possibility. So this is a wrong statement. High inventory turnover ratio is good for the organization, except when goods are brought in small lots and sold quickly at the low margins to realize cash. This is a correct statement, and sum of operating ratio and operating profit ratio is always 100% or 1. This is also a correct statement. So I'll go with second and third. So this is the C option is the correct answer. Let's move to the next one. This is question 28. You are supposed to calculate interest coverage ratio. So when I'm saying interest coverage ratio, the formula is profit before interest and tax divided by finance cost or interest. Here profit after tax is given to you. Profit after tax is 12 lakhs and there is a tax rate given to you which is 40. Now here let's assume profit before tax is X. That means tax will be 40 upon 100X. So if I'll say profit after tax will be X minus 40 upon 100X equal to upon 100. So profit after tax is your 12 lakh. You make it equal to 12 lakh and calculate the value of X. If I'll just go for it, 12 lakhs into 100 upon 50. So it is coming as 20 lakhs. So profit before tax is your 20 lakhs and there is a 10% interest on debentures. So you are having the debentures of 1 crore. So 10% of it. So I will be calculating with this profit. So profit before interest and taxes 20 lakh plus 10 lakh is equal to 30 lakhs. Now I'm going to put the values here in this. This is 30 lakhs of profit before interest and tax and there is an interest of 10 lakhs. On 1 crore 10% is 10 lakhs. So it comes out as 3 times. The answer is. Now we are having question 29. Pay attention on it. Insurance claim received by Albert Company of rupees 5 lakh for loss of machinery due to theft will be recorded in cash flow statement in which of the following manner? First thing is always remember when there is a any kind of claim you are getting to in the loss of any fixed asset. So it is a inflow of cash through investing activities. So I'll just go through, have a quick review. There is an inflow of investing activities. There is only one there is one option, that is D, which is inflow of investing activities. So this is the correct answer. Subtract from operating activities as an extraordinary item and inflow under investing activities. So there is another option for the question, that is second part of it. Company issued 20,000 9% debentures of rupees 100 each at 10% discount. So this is very clear that company has got there is a 18 lakh rupees company has got by issuing of debentures. That's the financing. So 2 lakh rupees discount but then there is a 15% premium at the end of 5 years. That means that also is a loss for the company. That is of 3 lakh on 20 lakh of debentures. So it comes out as total 5 lakh. But the company is having, there is a securities premium of 3 lakh 70,000. So out of 5 lakh, 3 lakh 70,000 will be written off through securities premium account. So that means one thing is there is a financing, there is a 18 lakh of financing activity and 1 lakh 30,000 added under operating activity as a loss on issue of debentures and inflow of 18 lakh under financing activity. So this is the right answer for this question. There is another question. From the following information, find out the inflow of cash by sale of office equipment. It is always advisable that you just try to make a simple account for office equipment because depreciation is given to you. Here the purchase of office equipment a year is given to you and part of office equipment is sold at a profit of 12,000. You are supposed to see that how much inflow that is only that could be only reflect in the case of sale of office equipment, and I'm not having the figure of it. So for that, what we will be doing, let's try to make the office equipment account. Because office equipment is an asset, so the opening balance will be on the debit side, which is 3 lakh. That is on 31st March 2021. On the other side is a closing balance of 2 lakh, which is on 31st March 2022. There is a depreciation of the year on the office equipment is 40,000. Then there is a purchase during the year, which is to bank, will come here. This is 30,000 here. Then there is a part on a profit. So we denote the profit here with statement of 12,000. Once you have noted down all these things, when you will balance it out, you will get the hidden figure of 40,000 here and by bank balance here. So this is 3,40,000 minus 1 lakh. Let's check it out. Is this option available? Yes, very much there. So the option for this question. Let's go with question 31 about major heads and subhead. Current maturities of long-term debts, your current liability. Short-term. Fixtures, furniture and fixtures is non-current asset. The major property, plant and equipment, tangible assets. So provision for warranties will be non-current liability. It will be long-term provision. Income received in advance. This is current liability. Other current liability. Capital advances, non-current assets and long-term loans and advances. Advances recoverable in cash within operating cycle. So it's a current asset. and short-term loans and advances. So these are the major heads and subheads. Let's move to the next question. So question 32 here, Lala Limited and Bala Limited use different accounting policies for inventory valuation. These variations leave a big question mark on cross-sectional analysis, and comparison of firms was not possible. So identify the limitation of analysis highlighted in the above situation. When it is being asked to identify the limitation of ratio analysis, here it's very clearly written the different accounting policies. So there is a variation in accounting practice or variation in opting the accounting policy in valuation of inventory, because there are different methods of valuation of closing inventory, first in first out, last in first out, or average cost basis. There are different methods. So if these two are already opting the different methods, then the cross sectional and comparison is difficult for an analyst. That there are, then the question is asking any two other limitations of ratio analysis apart from this identified above. So I have just noted down here three limitations. You can just pick any two of them. Limitation of accounting data. If your accounting data is having any kind of limitation, that will reflect in your analysis as well. Ignores price level changes, because your data is all based on historical cost concept. So price level changes your accounting is ignoring, so that will be ignored in the ratio analysis as well. Qualitative aspects is not accounted in accounting, so that will also be there, because our ratio analysis is all based on your historical accounting. So this is question 33, the first part of it. Determine return on investment. So ROI or return on investment, the formula is profit before interest and tax divided by capital employed into 100. And another is net asset turnover ratio. So first we will address return on investment or return on capital employed. So it is given profit after tax is 6 lakh and your tax rate is 40%. So here we need profit before tax and interest. So let profit before tax is equal to X, because your tax rate is 40%. So that means the tax will be 40 upon 100x, and it's very clear profit after tax will be x minus upon 100x is equal to 60 upon 100x. और हमारे पास वो फिगर अवेलेबल है प्रॉफिट आफ्टर टैक्स की विच इज ऑफ 6 लाख, तो मैं इसको 6 लाख के इक्वल लिख सकती हूँ. यहाँ से मैं अपनी x की वैल्यू इजीली कैलकुलेट कर सकती हूँ. सो लेट्स कैलकुलेट द वैल्यू ऑफ x हियर. If I have to calculate the value of x, I will be in these two on this side is 100 on 6. It is coming out as 10 lakh. So X means profit before tax, but we require profit before interest and tax. So it is 10 lakh is your profit before tax plus interest. Now you are having 15% debentures were of 20 lakh and 10% of bank loan was of 20 lakh. So let's calculate the interest on these two figures and then we will be putting this here with this. So here if I'll just take 15% on debentures, so the interest will be, it will be 15% of 20. So it is coming out as 3 lakhs. On the other side 10% of 20 lakh, so 10% of 20 lakh will be 2 lakhs. So if I'll just go with it, we are not having any other figure of this, it is coming out. So 5 lakhs is my interest, so I will be putting it here. interest is plus 5 lakh. That means profit before interest and tax is 15 lakhs. Now we need capital employed. Let's check it out. Capital employed is debt plus equity. Here my debt is 20 lakh plus 20 lakh, 40 lakh. On the other side, if I'll go with equity, my preference share capital is 30 lakh. My equity share capital is 40 lakh and reserve and surplus is 10 lakhs. So I have to add all these values to get my capital employed. So let's calculate capital employed here, the values. Equal to 15% debentures plus 10% bank loan plus 12% preference shares, equity share capital plus reserve and surplus. So now I'm putting up the values here. 20 lakh of debentures, 20 lakh of bank loan, 30 lakh of preference shares, 40 lakh of equity shares and 10 lakh of reserve and surplus. The total will be 1 crore 20 lakhs. Let's put these values in the formula here. So we are having the formula of ROI here. PBIT is my lakh. On the other side, my 1 crore 20 lakhs is my capital. So ROI is coming as 12.5%. Now we are having another formula, net assets turnover ratio. Let's do this one. When I'm saying net assets turnover ratio is it is always in times. RFO upon net assets or capital employed, that's one and the same thing. And we have already calculated the value of capital employed, which came out as 1 crore 20 lakhs. And the sales are given here is 3 crore 75 lakh and there is a 15 lakh return on it. So this is 3 crore 60 lakhs. The sale is 3 crore 60 lakhs and your capital employed is 1 crore 20 lakhs. 3 times the answer. So there is another part of this question where your debt to capital employed ratio is 0.3. State whether the following transaction will improve, decline, or will have no debt to capital employed rate, and also give reasons for the same. So first thing is sale of equipment costing 10 lakh or 9 lakh. So there is a loss on sale of equipment, capital loss. Of course, it will not impact your debt on any cost, but yes, it will reduce your capital employed. So the ratio will improve. When you are giving answers to the questions, you have to write down the proper reason that there is no change in the debt but there is a reduction in the capital employed. So because the denominator is reduced, so the ratio will improve. Now the next is purchased goods on credit 1 lakh for a credit of 15 months, assuming the operating cycle of 18 months. That means your operating cycle is of 18 months and you are buying goods on credit for 15 months. So it is not impacting your long-term things. It's a part of your working capital. So it is no way impacting your debt to capital employed. So no change. Conversion of debentures into equity shares of rupees 2 lakh. This is a clear-cut decline in ratio because your debentures are coming down, which is the numerator part of the ratio, and equity shares is the part of capital employed, which is there is no change in that because capital employed is debt plus equity. So because numerator has been reduced, so ratio will decline. Tax refund of 50,000 during the year. So it will, because you are getting tax refund, so it will increase your denominator, the ratio will decline. So this is question 34. Read the following hypothetical text and answer the following questions. Ashna, an alumnus of CBSE school, initiated her startup Smart Pay in 20. Smart Pay is a service platform that processes payments via UPI and provides credit or loan to their clients. During the year 2020, Smart Pay issues the ratio 5:1. Whenever there is a bonus issue, that is not the part of cash flow statement because it's a cashless transaction by capitalizing reserves. The profits of Smart Pay year 20 after all appropriate was 7,50,000. So this is the profit. This profit has arrived after taking the consideration following items. You know it in operating activities. Interim dividend, आप net profit before tax and extraordinary item आप इसको ऐड कर और फाइनेंसिंग एक्टिविटी के अंदर आप इसको माइनस. दिस इज एन एडजस्टमेंट फॉर नॉन कैश आइटम्स, एडजस्टमेंट ऑफ नॉन कैश, दिस इज नॉन ऑपरेटिंग. ये दोनों भी आप ऐड करेंगे. इंश्योरेंस क्लेम रिसीव्ड फॉर लॉस ऑफ मशीनरी ड्यू टू फायर. यस, दिस इज एन एक्स्ट्रा ऑर्डिनरी आइटम. Interest on non-current investments received. This is your investing activity. So not be the part of your operating activity. We have to adjust it. We have to deduct it. So these two things we have to deduct to operating activity. And there is a tax refund that is again an extraordinary. So there are two extraordinary items, one non-cash and one is non-operating item. And let's see what all is there in the balance sheet is not given, but in a different form, lot of here. Your equity share capital is from 10 lakh to 12 lakhs, security premium from 5 lakh to 6 lakhs, general reserve will not impact in of the cause it. Investment marketable securities part of cash and cash equivalent, cash in hand, of course the part of cash and cash equivalent. Machinery is the part of investing activities. 10% non-current investment is the part of your investing activity. Bank overdraft is the part of your financing activity. I can just write it down: financing activity, investing activity. So goodwill, there is a reduction in the goodwill, so it is a non-cash item, amortization of goodwill. Provision for tax, of course, provision for tax will be the part of your operating activity. Then goodwill purchased during the year. So it is very clearly written, goodwill written off is there. We are supposed to make the goodwill account to find out that how much being written off. And then there is a proposed dividend for the year March 2021. We are not concerned with 2020. We will be concerned only and only 1,60,000. Let's see what your question is asking. We'll just go accordingly. The question is asking us, you need to calculate net profit before tax and extraordinary item. We are having everything, we have already analyzed the question. We can reach to this and then calculate operating profit before working capital changes. Then we need to calculate that cash flow from investing activities, calculate cash flow from financing activities, and cash and cash equivalent, that is closing cash and cash equivalents. So let's start with cash and cash equivalents at the end of the year. You can easily calculate cash and cash equivalents at the end of the year. Check it. So this is 3,00,000. Let's write it down there. 3,00,000. Got it. Now we will be addressing one after another financing activities. Let's see where all we have written the financing. If you will see, one is 1,60,000, one is your bank overdraft financing, one is your this finance activity. There is a reduction in securities account, so that will not be there. So 2,00,000 of equity shares being issued, 1,60,000 of proposed dividend paid, and no, nothing, interim dividend of 90,000 is there. So let's list it out, all these. First is there is a proposed dividend of 1,60,000. There is increase in bank of overdraft of 50,000. And then this we will not be taking because it's very much the part of equity, but this is a bonus issue. And this issue has been done through securities premium. That's why the 2,00,000 came here, and here will not be the part of cash flow. So what all we are going to take here is, one is your bank overdraft, which is of 1,000. Then interim dividend, which is an outflow, 90,000. Then there is a proposed dividend, is 1,00,000. I have taken interim dividend. I have taken. So there is a outflow. There is a outflow of cash through financing. Now we'll check out the next thing here. It is given, being asked, we have already solved our financing activities. It is coming out as, now calculate cash flow from investing activities. So for investing activities, we have to go with machinery account. The opening balance of the machinery will be always debit balance, क्योंकि asset, इसका closing balance आपके क्रेडिट साइड पे आएगा. डेबिट होता है, एसेट का बैलेंस यहाँ पे आएगा. 2,00,000 is the opening balance and 3,00,000 is the balance. And here it is very clearly given that depreciation here 40,000, and then there is a loss by fire. Out of that, the 10,000 is being admitted by the insurance company. So the final thing comes out as a balancing figure with us. So there is a purchase of 1,60,000. So let's put it together for our investing activity. So here, if I'll go with investing activity, interest on non-current investments, it's very clearly written here. Interest on non-current investment is 30,000. Insurance claim you got 10,000. Purchase of machinery of 1,00,000. Purchase of goodwill is of 20,000. And purchase of So altogether, there is a cash used in investing activity. The top liner is calculate net profit before tax and extraordinary items. So we will be taking, just pay attention here, we will be taking net profit is given here 7,50,000, and then we have to add interim dividend in it. Then we have to add this loss by fire. Then we have to add minus this extraordinary item, and then we have to deduct this tax refund. Along with that, here, if I'll just go with this, there is a provision for taxation. Then you have to take the current year's provision for taxation, which is your 80,000 that you are supposed to add in it. And then there is a proposed dividend. How we are going to get it? So there is a net profit of 7,50,000 for tax, 80,000, interim dividend 90,000, proposed dividend 1,60,000. So these three are extraordinary things that you have to deduct or add. And finally you will be getting that the final figure, which is your 10,07,000 as net profit before tax and extraordinary item. Now we are left with one of the value here, which is your I'm just now this is calculate operating profit before working capital changes. We have to take like goodwill written off is one of the, we have just here written here very clearly. We have mentioned it's a non-cash item that you have to add over there. Then general reserve is same, so you will not be taking it here. If I'll go with it, depreciation is non-cash that you have to add. So we have to add these things, calculate our, so this amortization 1,000 and depreciation. So your operating profit capital 7 lakh 50. Or last thing, operating profit. Here your goodwill, because you have value of purchase of 20,000 plus 20,000 is amortization happened of 40,000. Have to just, and let's put the final value, this 7,50,000. And that's it for the day. Best of luck.